The rise of financial technology, the so-called Fintech, has been meteoric. Get insights into what's driving the Fintech boom and what the key trends are for the future. Learn everything you need to know about GDPR and PSD2. Catch up with open banking and the digital transformation of financial services. Find out what law changes will impact Fintech. Join us on the journey through current and future trends of online banking, insurance, loans, and payment providers.
So there we have it. If fintech is what you're looking for, listen, you're in the right place. So this is all about the rapid flow of innovation of banking technologies, from mobile banking apps to conversational robots to new payment technologies and pretty much everything in between as well. So we've got some cracking talks ahead of us and a great panel coming up a little bit later as well, entitled Fintechs Are Taking Over the World. I'm intrigued as much as you are as to what that really means and really what's going to be shared. But for now, right now, we're going to listen to a gentleman share some ideas with a talk entitled Fintechs Everywhere. Fintechs Everywhere. Again, curious, intrigued. I am about to hear from the gentleman right now from the USA, co-founder of Better Tomorrow Ventures, Sheil Monot. Sheil, hello. Are you there? Are you with us?
Hello. Yeah. How are you guys doing?
Yeah, really good. Really, really good. I have to say, the first thing I'm going to have to say to you is your background. Where did you find your background? Because the thing is, we have already seen that background today on one of the semi-final pitches today, and he used this background. I asked him if he was in San Francisco. No, Skopje, Macedonia. Where are you? Are you actually in San Francisco?
I'm actually in San Francisco. This
But
default Zoom background.
But that isn't. That's
for me.
just like a typical Zoom background you can just pick out. Is that right?
Yeah, I think it's one of the like 4 or 5 default ones.
Okay, but if
happens
anybody
to work well for me,
if anybody has, that's right. If anybody has the right to use that background, it's you, Sheil. Yeah.
How did you know it was a background? I could have just been in front of this bridge, you know.
No, because the
good
picture,
sleuthing on your part.
The other guy, the gentleman this morning, he had the exact same picture, and he said it was a background, so I knew. Okay, listen, fintechs everywhere. I'm intrigued. I'm sure people listening right now are intrigued. Not quite sure exactly what that means, but they'd love to hear what it does actually mean. So I'm going to leave the floor to you. What we're going to do as well, people that are listening right now or joining in very shortly, if you're curious, you want to ask a question to Sheil perhaps at the end about what he's been sharing or anything else, in fact, pop it in the chat, and if there's time, we'll try to squeeze that in at the end. Okay, Sheil?
Yeah, I think we should have time. So
okay, Sheil, over to you.
Great, thank you. So what we're talking about here, fintech everywhere. So I think there's 2 things here. Fintech is everywhere, as in globally, fintech is everywhere. But I also want to talk about how fintech is everywhere in terms of it's not just in companies that you think are fintech companies. So let me start by introducing you to myself. So I'm a GP at a fund called Better Tomorrow Ventures. And prior to that, I have had 2 exits. Oh, you know what? Hold on. Can you guys see my second slide? No. Oh. Let's see. My slide does not appear to be advancing, but you should be seeing a picture of me. So, fintech entrepreneur twice. Started a payments company and an auction company. Both were acquired, one in 2012, one in 2015. And then I'm an advisor to a bunch of various banks and other things. So that's a bit about me. Our fund, we are a $75 million fund. We lead pre-seed and seed stage rounds in fintech companies. And to the point, we invest globally. So So far, we've got 20 investments in the fund, one in Africa, three in Asia, two in Europe, three in Latin America, and 11 in the United States. And the partners of the fund are myself and my partner, Jake. And Jake was co-founder of a company called NerdWallet, very famous in the personal finance space, recently filed to go public at a $5 billion valuation. Okay, so what the hell is fintech? So first of all, I'll start by defining the traditional definition of fintech, which is it includes, I think, payments is historically one of the things that people talked about, and lending. So payments, the company's Stripe is a big one. Lending in Europe, Klarna is a big one. Wealth management, we've seen, of course, many companies that from robo-advisors and others. Insurance is another big one. I think we've seen over the past 3 or 4 years, there are many companies that have digital distribution. I think across all of fintech, what we've seen is there's been a lot of bringing something offline online. So in each of these segments, particularly lending, banking, personal finance, insurance, the innovation over the past decade has largely been bring something that was offline online. It was a bank, now it's online. It was an insurance company like called Lemonade in the United States, focused on renters insurance. It was offline, now it's online. I think in the coming years, we are building infrastructure in each one of these categories that allows it to move from just digital distribution to a whole new type of business. And for the ones doing digital distribution, what you'll find is insurance is now, or insurance, lending, personal finance are truly now everywhere. So if you are building an insurance company today, you have to go out and acquire customers. Tomorrow, it may be that your e-commerce company already has insurance built in. There are companies like Tesla and auto insurance for which insurance is automatically built in. And we're going to see a lot more of that. We're going to talk about that later. So let's talk about sort of fintech funding and the dramatic rise in it. So over the past 3 or 4 years, there's been about 40 billion plus in funding every year. And we saw a rapid rise in funding in Q1. And so nearly doubled funding year over year. And it's actually no surprise to me. It was by far our busiest quarter. I think what we're seeing now is, over last year, we saw, during the pandemic, a lot more companies being formed. And I think there's been a lot of hype and excitement into the future of fintech. And because of that, people who otherwise might have started other companies are starting fintech companies. So that's been tremendous for me to see and for our fund to be a part of. We invested a lot more money in Q1 than we thought we would. And, of course, you guys are in Europe, so you might want to know about Europe. Europe is nearly tied with Asia for deal quantity. So 151 venture-backed deals in Q1. It's similar to Asia, which is 147 deals. For a long time in the past, you can't see the real past, but Asia was dominating the last several years, and now Europe has actually had a lot of deals. Of course, North America is still the leader in terms of deal quantity. And then we look at unicorns. So fintech is everywhere. This is a bit dated slide, so it's about a year old. But you see there are 70 unicorns globally, by far the majority of them in the United States, but also an increasing number in Europe. And we have a dozen unicorns in Europe, and there'll be a lot more to come here. What we're seeing in the United States is companies are going public. So in the past year, since this chart was made, 3 or 4 of these companies have gone public, and a few more have been acquired. So we actually see, because unicorns are defined as private companies, this United States side is shrinking. There's been a tremendous amount of money in SPACs. So for those of you who don't know, SPACs are special purpose acquisition companies, and there are about 600 of those SPACs, and among those SPACs, they're about $320 million on average. And so those are companies that have been formed that are looking for an acquisition target. And if you think about what that means, it's kind of mind-boggling how much money there is waiting to do a round into a company. About 75 of those are focused entirely on fintech. So they must find a fintech acquisition target. And then some of the non-fintech ones are also looking at fintech companies. So yeah, in my portfolio, there are tons of companies that are not fintech companies, or sorry, not that have non-fintech SPACs looking to do a round into them. So you're going to see a lot of liquidity in the next couple of years. It's going to be crazy. Okay, so back to fintech. Financial services is just a massive part of the economy. Huge fragmented market, 17% of global GDP. And then also importantly, there's $480 billion of technology spend just in the large banks in the United States. And, to date, regulation has discouraged innovation and created geographic segmentation. So if you started a company here, you could not easily go to another market. And innovation, sort of as we talked about, has largely been in distribution or digitizing incumbent business models, but not a real change in services being offered. And that's about to change. So a few reasons why. Number one, infrastructure is lowering the barriers to building startups significantly. So Simple was the first popular neobank in the United States, started about a decade ago, and it took them 2.5 years to launch their bank. They raised funding in 2009, didn't get their bank going till 2011, and it spent a lot of money getting there, didn't have that money to then go out and acquire customers, weren't getting the direct deposit customers they needed. But now we've seen the craziest things. A single engineer, like literally one person, can launch a bank in, this says 6 months. Actually, I should update the slide because I've seen it recently happen in a month and a half. And there are companies like Unit in our portfolio, Unit.co. In Europe, there are companies like Railsbank that make it really simple to get up and running. And it's just mind-boggling what you can do. And if you think about what that enables sort of the last 15 years allowed these architectures to let anyone build a startup. A simple example is AWS. So Amazon Web Services has allowed sort of anyone in the world to get up and running very cheaply. Before you used to have server costs, all these other things. Now, very cheaply, you can get up and running. So similarly, now there are APIs and partnerships models with alternative forms of capital and regulatory frameworks that enable a lot of experimentation. So you're seeing, for example, in the past few months, I've seen a neobank geared towards gay and lesbians, a neobank geared towards Hispanic populations in the U.S., a neobank geared towards this disabled population. I even saw a neobank geared towards dog parents in the United States. Now, many of these I think will not survive. Some of them actually are. And if you look behind the onion, actually, these are quite interesting demographics. So there's one focused on the Asian demographic. I think there are specific reasons why these demographics may want a specific bank. And if you look to the history of the United States, actually banking goes in that way. So, there were banks that were dedicated to agriculture. There were banks that were dedicated towards a particular demographic. In fact, my favorite example is Bank of America was actually originally Bank of Italy. It was called Bank of Italy, and it was dedicated towards banking the Italians in San Francisco. So there's a huge Italian population in North Beach. Their first branch was there, and it was called Bank of Italy. And these niches will go out, and many of them will end up becoming big banks. And that's a tremendous opportunity for innovation. So, what more? Incumbents are finding innovation challenging. So, a lot of the operational expenses for legacy companies are spent maintaining outdated systems. They are incredibly slow to adopt accelerating tech, and they have difficulty attracting top technology talent. If you look at all the jobs posted by Goldman Sachs last year, over 50% of them are technology. So they're really looking for technology talent aggressively, and that's something that they're really struggling with. A number of our companies are recruiting the top people from Goldman to join our companies, and we'll see a lot more of that to come. So I want to talk about FAMGA. FAMGA is Facebook, Apple, Microsoft, Google, Amazon, and we are seeing them increasingly get into fintech. So if it's Facebook, this is just in Q1 things that were announced. So in Facebook Q1, they announced an integration with Shopify Pay, so Shopify merchants can directly partner on Facebook and Instagram. I think the biggest opportunity for Facebook is in Africa and India, where they're partnering to make WhatsApp a payment network. I think there'll be some significant challenges to what they're trying to do, but in India in particular, I think there's a huge opportunity. Apple has launched the Apple Card well over a year ago in the United States, and it immediately became the fastest growing credit card. They now announced that Apple Pay is supporting crypto payments, so that's actually a huge opportunity. Even Microsoft launched a cloud for financial services, so they're getting into fintech. Google has Google Pay, of course, and the same thing that I mentioned for Facebook, which is payment through WhatsApp Pay, is going to be there for Google Pay. And Amazon acquired a company I had looked at, actually, that's a payments platform for offline retail stores. So all of these players are getting into fintech in a really big way, not to mention Tesla getting into insurance and others. So back to the slide. Why do we say everything is fintech? I really think that many of the companies that you think of as fintech today are just a small sliver of what's going to be fintech in the future. And to give you an example of something we invested in, there's a few examples. So one, a company called Flexport. It is a customs and logistics company at its outset. So what they do is, if you have, let's say your Nest, you're making thermostats. You have 1 million thermostats in Shenzhen. There are all these steps it takes to get them to the United States, and Flexport helps do those things. And so along the way, they see you order from the same supplier in China time and time again. And now, next time you order, they say, hey, it takes about 90 days for those goods to get here. Why don't we give you money along the way to get those goods to the United States? And they'll front you all the money you need. And so that's actually a huge opportunity for them in lending. Another one is insurance. And so for us, while if you have a distribution and data advantage, we think you'll be a fintech company. So this works for vertical SaaS and works for marketplaces. And startups like Uber, Airbnb, Shopify, and Flexport are moving into financial services, and many of them are partnering with our fintech companies. So we truly envision a world where fintech is ubiquitous. And I believe I'm now out of time. There are a couple of questions in the chat, and actually, I think we're out of time, so we've got to move on.
I think I'm back. Am I back?
Yes.
Yeah, I am back. Great. You can see me now. Fantastic. Yeah. So yeah, maybe just out of time. But hey, here's the thing. I believe you're back again with us for the last panel discussion. So and that's actually over an hour. So you'll have time to share more insights as well. And again, if you're listening to this, if you're listening to the next talk or the next panel discussion as well, if you want to ask a question, hopefully we will have time to answer those and share those with our speakers. Listen, Sheil, thanks so much. And what time is it over there, by the way? It's about 10, 11?
It's now 6:50 a.m. So
6:50 a.m. Oh my word. Well, you're looking good, my friend. You're looking good for
Thank you.
getting up so early.
Yeah, things you do to meet with the European audience.
Okay, listen, Sheil, we'll leave it there. Thank you so much, and we'll bring you back into Maribor. Actually, you can have a little bit of a sleep now, I'm sure. A little bit of a sleep, maybe a coffee or two, and then when you're freshened up, join us back for the panel discussion. Thanks so much, Sheil.
Sounds good. Cheers.
Bye-bye.
Bye.
Right, we move on now to our next session within our FinTech block here in Studio 2. So if I ask you, regulatory and legal framework changes, what are the FinTechs, what should FinTechs really be aware of in terms of those two, regulatory and legal framework changes? What would you say? Well, the next gentleman here about to share his insights, he's going to answer that question for you and many others as well. So please welcome co-founder and CEO of the FinTech Factory right here in Slovenia, Peter Muntz. Peter, are you with us? I can see you and I can hear you. So definitely those two, you are here, you are with us, and intrigued to hear your insights right now. Where are you right now in Slovenia? You are in Slovenia right now, yeah?
Yeah, I'm in Ljubljana.
You're in Ljubljana, just simply down the road. Right, Peter, over to you.
Okay, thank you, everybody. I'm really pleased to be here. I really hope that this will not be another boring presentation about the legal issues. We all know that fintech is a vivid ecosystem. It's a very interesting industry, but of course there are some legal challenges. Also, there are some opportunities which are deriving from the regulation. And the most important things I would like to discuss with you today before we move forward with the panel. So maybe just to start with the short introduction, I'm a lawyer. I lead a legal advisory company, but before that, I started my career in banking sector in the field of financial instruments and in the field of compliance. And I'm also starting now my own mini venture fund called Suricate Ventures, which will be investing in fintechs and in gaming. So that's in short about me. What I would like to talk with you today about is I will introduce to you a few milestones that I think are or were the crucial ones for the development of the fintech and banking industry. And then I will also share with you some legal challenges that I have witnessed in the practice while working for different fintechs. Okay. So we already heard that from the previous speaker. This data was mentioned. Practically every fintech today is some kind of data company. We are living in data-driven society, but this is not something that is unique for the recent times, for the present. It was something that was also very important in the history. We all know for the institute called banking secrecy. Banking secrecy was one of the most important fundamentals of the banking sector, of the banking industry in general. Banking secrecy, is also called financial privacy, was let's say somehow regulating this privacy issues between the clients of the bank and the bank. And this banking secrecy gave a lot of power, a lot of monopoly power over the users' data to the banks. And in 2018, in the European Union happened the so-called PSD2 directive, Payment Services Directive, which is also called Open Banking Directive. And what was very, very innovative with this new regulation that, as I mentioned, stepped into force in 2018, was that there was an end of this so-called banking secrecy, meaning that, of course, with user consent, banks were forced to share their data deriving from the users, also with other services provider, meaning also with fintechs. And of course, something that was before this PSD2, before the open banking, something that was in full monopoly power of the banks, was now shared across the fintech sector. And of course, all that was technology driven, but by the so-called APIs. And what we are witnessing now is I would say a revolution in fintech environment, which was, as I said, mostly driven by this new regulation which came in force in Europe. What this PSD2 is also governing is it's a regulation covering also fintechs, regulated fintechs, meaning fintechs with payment institution license and fintech with electronic money institution license. We are in this case we are talking about so-called light fintech licenses. So now in European Union we have this regulation which is EU passportable, meaning that once you get this light banking license in one European Union country, you can passport your services to all other European Union countries. So if you ask me, I personally believe that this, at least in Europe, this PSD2 license is the most fundamental force for the future development of the fintechs. A little bit more fresh is the so-called crypto assets regulation that was introduced by European Commission in last year in September 2020. The regulation is called Markets in Crypto Assets Regulation, and what it will bring, it's a comprehensive legal framework for all the crypto economy. So this future regulation is addressing different stakeholders. It's not addressing only the crypto assets, different types of crypto assets, but it's also addressing different providers of crypto markets, of issuers of the cryptocurrencies, and so on. So what was the, I would say, very, very high risk for all the companies, including of course fintechs, which operate in the fintech and crypto business in the past, was this lack of clear regulatory framework, and this is about to change now. But of course, it can be also a little bit frustrating for the fintechs and crypto companies, because it can easily happen that regulation will not accelerate the business, but in opposite, it may slow it down. But we will see. The funny thing is that we all know that this Genesis block in Bitcoin happened in 2009, and most probably we will get this crypto asset regulation in European Union in 2023. So that means almost 15 years later. But it better late than never. But once again, I personally think this will also accelerate the whole blockchain industry. Crypto business will go mainstream. We are witnessing financial products that are some kind of bridging crypto and traditional industry, banking, financial industry. And of course, with this regulation in place, this all will accelerate. What is also expected, similar to GDPR, we know the regulation covering this personal data protection. GDPR became a global standard also in California. The similar law was introduced, which have these basic fundamentals taken from the GDPR, and it is also expected that something like this will happen with this crypto regulation. So I think that with this regulation we are now building some let's say fundamentals for all the future crypto business. The third one, the third milestone, which I also think will be very, very important for the future development of fintech industry and, of course, of the banking industry in general. It's not directly related to the regulation, but it's very important. I think these digital currencies issued by the central banks. More than 30 countries, I think 38 countries at the moment are developing some kind of projects related to these digital currencies issued by the central banks, so-called gov coins, including European Union. We are expecting to have digital euro in 2 years. Swiss central bank, it's very advanced with their digital krona. I don't know if you are aware of the fact that Sweden was the first country in the world that introduced paper money and will most probably the first or the second after the China to become fully cashless. So this is also, I would say, one very important milestone for the future digital economy, where fintechs will play very important role, and where the role of the banks, which are now the most important institutions of the banking of the financial industry, these roles will definitely change for good. So these were three milestones, and of course. Not only these milestones are having major impact on the banking and on the fintech industry. Also, some other technologies which are somehow related to regulation will play crucial part. One, of course, is digital identity. We all know that a lot of things is going around this digital identity. It's very important question, and we all know that practically every day we are producing more and more data on the internet. We are more and more active on the internet, and digital identity is the basis for everything. And of course, it's also closely related to fintech. Biometrics, big data, cloud services, these are all most disruptive technologies which are having major impacts on the fintech. But of course, on the other side, there are also major challenges with the regulation. GDPR is one aspect. I can tell you, for one example, here in Slovenia, that we wanted to start a pilot project with one Austrian startup, which would introduce this kind of biometrics authentication with the payments. But of course, at least Slovenian regulator, which is very rigid and old school, didn't allow that because they say that there is no right or justifiable legal grounds to conduct such a pilot under the existing regulation. I really hope that regulators in some other European Union countries are more liberal. There are also some very important new documents introduced by European Union institutions, European Union Commission, European Union Parliament, which will also have major impact on fintech and also on some other aspects as well. There are two of them that I listed. One is a document about European big data strategy. I would advise you to read this document. It's really interesting about to see into which direction European Union is thinking or is heading to with regards the big data, with regards the establishment of so-called data trusts. This all will have major impact on fintech industry, and of course also the artificial intelligence and the technology around artificial intelligence. So also there were some new documents produced this year, and I'm sure when I was reading, I'm sure this all will have also a huge impact on the fintech. So if you are a fintech company, you are for sure witnessing or facing a lot of legal challenges. It can be done to establish this bulletproof legal infrastructure for your business, but it can be costly and it can take a lot of time to be on a safe side. There are some I would say legal challenges that practically every fintech is facing, but of course these legal challenges are variable due to products and or services that each fintech is providing. But in general, the problem is that there practically every day new business models and new disruptive technologies are taking the place in fintech industry. On one side, and on the other side, we have this old school regulation. So it's a little bit challenging to implement all this new business model into the existing regulation. And as we see in the case of crypto assets, when you are establishing your own business, when you are developing your own products, you cannot wait for 15 years for the applicable regulation. So this is a challenge, but this is a challenge not only for fintechs, but I would say it's an industry-wide challenge, especially for companies that are developing new innovative products. What is also problematic, I would say, from the perspective of fintechs, it's a fragmented regulation that, apart from this PSD2 regulation, which should be same in the whole European Union, but as we'll see later, unfortunately, it's not the level playing field. It's not ensured. You need to be careful about these local specialties, local licenses. Estonia is one very good example of it. Few years ago, they introduced local licenses for crypto business, local licenses for fintech business, and of course, these are more or less just a way of doing business and attracting fintech companies to be incorporated in Estonia. But these kind of licenses, these kind of local licenses are not EU passportable, meaning that license for crypto business or license for fintech business adopted in Estonia, it cannot be EU passported through other countries within the European Union. So these kind of licenses are, at the end of the day, good for PR reasons. I have seen fintechs and crypto companies which were publishing that they are EU regulated business, but of course they are not. They are regulated in Estonia or maybe in some other countries, but they are not regulated on the European Union level. What, of course, I also already mentioned at the beginning, compliance costs can be really high for the fintech companies. The regulation in some cases is very clear, and regardless if you are fintech with 50 employees or 5 employees, sometimes you need to be in full compliance with the same legal provisions, and of course this can cost you a lot of money. This is one one very interesting slide. You can see the number of clicks you need to open an account at different fintechs. When I saw that, I was really angry with all the Slovenian banks, because you need much more clicks, But once I started studying more closely, and of course, once I started advising to Slovenian fintechs about mostly anti-money laundering issues, then I noticed that this number of clicks, it's not only related to know-how in user experience, but also to regulation. For example, in Slovenia, you need a lot of extra personal data from the users compared to, for example, regulation similar or same regulation in Lithuania, where Revolut is registered, or from where Revolut is operating. So I would say that this is a problem, this level playing field, that regardless, there are some directives on the European Union levels. Of course, then there is a question how these directives are implemented in the regulation of the specific countries, and this question of implementation is at the end this difference for these different fintechs that are operating within the European Union. So once this level playing field will be ensured, I'm sure that also this number of clicks will lower. Okay, I mentioned briefly this anti-money laundering. This is the most crucial regulation related to fintechs, at least from my perspective, at least from my experiences. What will happen in the future, in the near future, it's that European Commission is preparing a regulation about the anti-money laundering. So that means, in fact, that now all the requirements for the fintechs and for the banks will be finally aligned. So there will be no differences between different jurisdictions, but everything will be on a same level, which of course I would say that it's most welcoming, especially for the fintechs that are coming from a little bit more conservative, from the countries with a little bit more conservative regulators. This is also one very, I would say, plastic example, and you can answer easily the question: if you are fintech, where would you go to get a license? This is a difference between Estonia and not Estonia, Lithuania and Slovenia. As you see, it's a huge difference, and mostly the question why so many financial institutions are going to Lithuania, it's of course regulation. But in practice, this shouldn't be happening, because the same regulation applies to Lithuania and Slovenia and to other countries. But practically everybody, every fintechs, every banks, for example, including Revolut, are going now to Lithuania, because the requirements from the regulators there are much easier than, for example, in most of the other European Union countries. Okay, that was in short about the legal aspects, about the most important milestones, about the legal challenges that fintechs are facing now. And now I would invite everybody to the panel with various esteemed panelists.
Right, I think actually before you do that, just want to say, just to wrap up this session, listen, Peter, that has really been an informative and resourceful session. So if you're a fintech, or if you're closely connected with fintechs, the changes you've shared and why those changes have taken place, I'm sure will be really resourceful and really helpful for those in the fintech world. So yeah, really good to hear from you there. Right, as Peter said, what we're going to do now is move on to a panel discussion, very simply called "Fintechs Are Taking Over the the world. And I think we have a very short video to show you right now.
It is time to rethink and to realign. Learn and get inspired. Prepare your questions and enjoy this insightful Podim DX panel.
Right, I will hand you back over to, guess what? Guess who's the moderator on this one? It's not me, it's Peter. You've just seen him. He's going to take back over now the reins and share with you who's in the panel and take everything forward. So over to you, Peter, once again.
Okay, thank you. Welcome everybody to the panel. I have set some questions. I have set some topics that I would like to discuss with our today's panelists, and I'm sure you will get a lot of different information, a lot of different aspects on the fintech topics. I would start with a very general topic. We know that really a lot is going on in the fintech space recently. Recently in last few years, but also in the present. I mentioned PSD2. We had a so-called DeFi hype, a decentralized finance hype that started a year or maybe a little bit more ago. We have these central bank digital currencies. We have neobanks, super banks, and my questions to start with to all the panelists would be: how do they see that this technology and this regulatory framework are impacting the fintech landscape today, and how they will impact it into the future? And I would give a floor to the lady first. Olga, please.
Hi everyone. Look, regulatory topic is obviously kind of, if you are fintech, you cannot be you have to operate within these frameworks, right? Obviously there are so to say frameworks which sort of define the latest deals which were happening in fintech. An example like open banking wasn't there was a huge wave of fintechs who either played on this and was building infrastructure for that, or those who were benefiting. And basically, let's not lie to each other, a lot of things has been enabled with this regulation, right? In general, kind of all the other things which you mentioned, I wouldn't say that it's kind of DeFi is not yet a hype. It's just it's just happening. We will see where it will lead us to. And in general, I'm just pretty optimistic, because fintech is always very regulatory heavy, but at the same time it's just framework which you always can find a lot of cool things to build around it. That's okay. It.
Thank you. Eric, you are the CEO of Bitpanda. You are mixing this crypto business with traditional business. Your company also has PSD2 license. You are operating under MiFID II. MiFID II is your regulation for financial services, for financial instruments. Please tell us how to successfully mix this regulated business with crypto services and products.
So, hello?
Hello, yeah.
In that second, I heard everything. In that second, when you started, I killed my speakers, so I have to put on these. Sorry, can you come again, please?
Yeah, of course. So you are CEO of Bitpanda, and you are within your company, you are mixing this traditional financial business with crypto business. Your company has this PSD2 license. It also operates under this MiFID II umbrella, which is the regulation for financial instruments. And please share with us how can you successfully mix this traditional financial business with crypto products and services?
You have to. First of all, where we're coming from is from the crypto space. So we started as pretty much just building a web shop for Bitcoin, you could say, and that evolved to something bigger where we realized what crypto brought us, we can bring to more asset classes. And when you have this thought, then that means, first of all, crypto has been established, meaning when this is getting an established financial asset product, certain regulations, will come in place. The more serious it gets, the more traditional, let's say, licenses and so on, the old law that is not really made for crypto, it has to be implied, that it has to be changed, but also sometimes, you have to find a way to put it in there. So that's one thing. And the other thing is what I said, all the learnings we have from crypto, we want to bring to more asset classes. We brought it to gold, silver, so precious metals, but of course also to stocks. We think that everybody should be, in charge of their finance. It doesn't matter how much money you have. If you want to do a €5 Amazon trade, although one Amazon stock costs €3,000, then you should be able to do it. And you should also do it like it's 24/7. As if the stock markets would have been invented today, because there's no reason why it shouldn't be, available 24/7 in the digital age. So, and when you take everything that has value in the same matter as financial products, you have to comply with all the laws. And actually, this is one of our core competency. In every market you go into in Europe, there is a different regulation in place because you get guidelines from the EU and everybody puts it in a different law. But yeah, the MiFID II helps a lot because MiFID II is one of the highest licenses when it comes to, like stocks, offering stocks or derivatives. So yeah, that goes naturally.
But did you face any serious obstacles with the regulators, or was the process at the end of the day smooth?
Bitpanda exists now for nearly 7 years. And what we have done, we were in conversation with the regulator from day one, constantly. And I think that is the only way forward on the long run to have a good relationship with them, to, also the whole industry grows and you have to come together all the time. You have to synchronize, sometimes you have to educate each other with very new things. So this is not a thing of, oh, now we're big enough, now we're going to stocks and hi regulator, here we are. It's a constant process. And we are in contact for 7 years. So
okay, good one.
That's an asset, that's an asset. It's not a and I think this is how fintechs will conquer the world. Not by going the old approach and seeing the regulator as how can we go behind it and make it, this is our partner. They also want you to become bigger and successful because it's also then their success. So make them like your partner, not in terms of like over friendly. They are responsible for you. They are observing you. They are regulating you, but don't see them as an enemy. And if you have an upfront approach, then proactive approach, this is good for everybody in the industry.
So at the end of the day, regulators need to be proud that they are regulating fintechs.
I'm not saying that they should be proud, but I'm just saying it. That the ones in Austria, they're doing a good job by having they put in place the fintech squad and so on. They modernized over the past years quite a lot. And what all regulators in the world have to work with is they also need to evolve in a way. The response time needs to be much faster than in traditional banks that are nationally operating. You need to operate on a global, at least European level, and therefore you need to have a different kind of speed. So
do you have some sandboxes, regulatory sandboxes in Austria?
Yeah, there are regulatory sandboxes. I think that for the regulatory sandbox that recently started, I think we are already too big. But for new stuff, I mean, we're super open in that regard.
But this is something that can also be useful for the fintechs to
Absolutely.
accelerate their business. Yeah.
I don't think there's any regulator that will, like have a proper fintech, let's say, infrastructure in the future with good companies that doesn't have an sandbox. If they don't have it, there won't be many good fintechs in the future.
I fully agree. Sure. Of course, I was listening to your presentation. You mentioned how big tech companies are entering fintech business. Apple Pay, Google Pay. You also mentioned several different technologies. Please share your view how this technology and regulatory framework will impact the banking finance sector in the future.
Yeah. So in the United States, it's easy actually. Like every one of the fintech companies that is in business today, it exists because of a sort of a weird rule that went into place in 2010 called the Durbin Amendment. So it regulated the price of money you make on a swipe from a debit card or credit card, or I guess now it's you enter a chip. But they regulated the amount you could make, except for banks less than $10 billion in assets. So all of these, and that exemption for banks with less than $10 billion in assets was kind of put in at the last minute. And every single fintech company in the banking space relies on this random exemption that went through. And that could change. So I think it's really important for the fintech companies to be close to the regulators, to understand what's coming. It'll be totally crazy if that regulation changes.
Okay, so you and Olga are coming from the world of venture capital. I guess you better understand fintechs, but are you also close to crypto business? How do you see this bridge crypto and traditional business? And do you believe that there will be someday a full fusion of both of these worlds?
I'm happy to start, and then happy to hear Shil's thoughts on that. So I mean, first of all, I think that kind of it's 2021, and I'm surprised if I can ever hear from any investor that we don't look at crypto. I mean, it's already a new reality, and it's not let's say 2017 or even earlier, when it was considered to be like pure speculative asset and no one wanted to touch it. Now it's a reality where we live. A lot of financial institutions are interested in it. A lot of institutional kind of companies are entering kind of a lot of crypto companies who serve institutionals and provide the institutional grade of products entered the space. And basically that's so to say new era in my view, right? So at Speed Invest, we are investors in Bitfunder. Before that, I recently joined Speed Invest. Before that, I was in Target Global, where I've done 2 deals in crypto space. One of them is Mercurio, another one is Copper, which is exactly the institutional custody, right? And all in all, what I see kind of it's exactly the way when kind of first of all, crypto is not kind of something extraordinary anymore. Everyone looks at it and it's just an asset class, and that's it. So we just have to look at the companies which, I mean, like you invest in stocks, you invest in crypto, same thing. And there is a lot to happen with the new NFT boom, and it's just the very first stage. And from kind of investors' perspective, I do not see any really kind of, there is little to no sign that it will stop and investors will again become suspicious to it, right? The next question is like if it's going to be integrated into day-to-day life in a way that kind of, if it's going to be the payment method, right? So that's a big question, but that's a bit of a different discussion already, right? But kind of crypto companies and VC funds, I think that it's already the stage when it's just new normal.
Okay, but when do you think this change, this sentiment towards crypto changed? So that as you mentioned, crypto was considered more or less as a speculation a few years ago, and now it's a reality. Now it's a new digital part of new digital economy. What happened? When?
Yeah, I mean, I don't think that there is a single kind of particular moment which brought this change, right? I think it was like rather gradually, and maybe then suddenly, as always, everything in life. So I mean, I think it was like really step by step, right? Again, being investor at Target Global, I used to invest in crypto facilities, which then was acquired by Kraken, but they were the first who basically facilitated the futures on Bitcoin on CME. And kind of that's already the first step, right? But at the same time, when I look at back to the time when I invested in copper, there was like really 4 times less in institutional crypto kind of assets under management than today. And that was like a bit more than a year ago. So I don't feel that it's kind of a very like a single point of no return, but it was like many events happening. And when kind of public companies started taking the reserves in Bitcoin, when it's going towards ETFs on different cryptocurrencies, when kind of it's one by one, all these kind of changes all together accumulate to the massive shift. And I feel like this massive shift has happened. And there is no kind of, I don't even see any kind of, it's not yet a peak, it's just the beginning. So I really feel it will be just growing and growing.
Yeah. Olga, do you remember, because you were looking into these companies quite early on?
Yeah.
I think what happened was that the market consolidated a lot.
Yeah, 100%.
I mean, you probably remember maybe the times when you had founders that probably selling multi-layer marketing energy drinks again. They were like the bandwagon people. Yeah. You know, it was at the time with this ICO hype, everybody had an idea. We will make the coin and have just name a random thing in the world, name another random thing in the world, put it together, make a coin out of it. At this time, it was super sketchy. These people are all gone. You know?
I know. Yeah, I was one of those who thought that this is like all like it's complete madness, and I was the one who didn't want to touch any crypto in 2017. Yeah. Right.
For a reason.
Like both from personal and from, let's say, institutional perspective as a fund.
I know, because for a reason, there was more than 90% was literally trash, scam, or like just pumped up marketing, whatever. So, and over the years, and also with regulation, the market consolidated. And if you see, for example, in the US and in Europe, which crypto companies are still there? There are very few brokers and exchanges, like very few, that also have licenses. And then all the other companies are infrastructure providers.
Absolutely.
That's it.
But let me ask you something. So don't you see parallels between this ICO mania a few years ago and this NFT boom now? It's happening the same. So 3 years ago, there were tokens, coins for everything. Now, practically everybody would like to issue their own NFT, either for governance, either for their digital collectibles, for everything. So my opinion is that only this facade is changing, but you have new hype here.
Yeah, but you have new hype. Sorry, please go.
Yeah, I actually just wanted to let Eric speak about it, because I was the one who helped the friends to launch NFT on the art piece over weekend. Please, Eric.
So you have every year new kind of hot topics. From the ICO hot streak, whatever that was, there was a lot of good things, a lot of good things established out of it that are now really, really great projects. Then you had the IEOs. Then you had, what else was there? Oh, then you had finally everybody's launching the stablecoin thing. Now you have NFTs, and NFTs are also here to stay as stablecoins. It's just a matter of 90% will be just, like from the first hype will be gone, and the rest will be big stuff.
Yeah. So it's very cyclic. So everything is the history happens again, but only in the different form.
Yeah, and I agree. I actually think that kind of if I try to look back at kind of different business models, right? It's kind of in every business model, fintech or not, it's all happening when there is kind of a trend and a lot of companies emerging. But then some of them just die on the way. Some of them get acquired. Some of them get acqui-hired, kind of, and then we just get kind of, and then regulation comes in place, and then it becomes not just hype, but just new reality, which is just everyone just lives with this. And I personally also believe that it will be exactly that way. And I'm personally kind of, it's surprising to me to say that, but I really kind of accepted my mistakes when I was like completely skeptical to it in 2017. And now kind of I see that it's just happening, and it will be adjusted, but it will be just new reality, let's say, in a year.
Okay, thank you. Shil, your comment, your perspective on mixing crypto and traditional fintech financial business. Shil, you're on a mute.
Yeah, it's funny. Olga said everybody has to be looking crypto. You should be, and I think from our fund, we actually don't. We think about fintech as being somewhat distinct, and the primary reason is we think if you're going to do crypto, you probably should be all in on it, and we're not. And I think we would do it if we hired somebody who was. We personally are very invested in crypto, sort of both in other funds and in coins ourselves. I sort of agree with what everyone else said. Peter, I think bringing up NFTs was spot on. I actually think, similar to ICOs, there were some good things, but mostly grifters out there. And I think the same is true of NFTs today. By the way, I think in sort of a little bit later stage, the same is true to a certain extent in SPACs today. So in any sort of new way of taking money as an investment of sorts, there will be lots of scams until you figure out what's really good.
Good. Okay, let's travel a little bit. Let's travel to China. The interesting fact is that 10-15 years ago, Chinese companies, tech companies, were mostly copying business models from Western companies. And from today's perspective, we can say that the reverse picture is happening. How do you see this? So do you think that now the time has come that Western tech companies, Western fintech companies should copy Chinese company in building these super apps and so on? Shil, will you continue, or Olga, who will start?
I would love to.
Olga, please.
I love this topic, to be honest. So first of all, I mean, I think that I'm sort of privileged to be, let's say, in between of two worlds, right? So I live in Germany, but I come from Russia, and Russia is sort of in between of Europe and Asia, literally on map, and basically kind of from tech development perspective. So I think that kind of, yes, China used to copy a lot of things from developed markets, but at the same time, when we speak about fintech specifically, they in emerging markets, and China, one of them, and the first of them, they effectively leapfrogged the whole, let's say, banking service system, the whole banking system. And in US and in Europe, it has been existing for ages, and it has been outdated because it has been existing for ages with little innovation. When in China, it was not like that, and basically they just leapfrogged that story and started kind of leveraging all the tools like messengers to become the payment tools. In that sense, why I say that kind of Russia is in between, because like we had the banking system, that wasn't leapfrog like in China, right? But at the same time, it was relatively new and able to innovate that fast that kind of I grew up with the banking, which is five years ahead of something what I'm experiencing now in Europe. But back to China basically, and kind of being messengers and being the entry point to the fintech services, and then becoming super apps, integrating everything, like all your life in this app, then kind of now Europe innovating with the players like Revolut, having them as already kind of not really newcomers and startups, but again, sort of new reality, still relatively kind of new and emerging, and we will see how it's kind of it all goes, right? But still, they build exactly this super app around the high, like super tech and innovative services which they already built. And I'm a big believer that kind of it will get there. We will see what would be the point of kind of entry point, right? So an example, it's easier to see it in emerging markets again. So an example, what we see with Glovo, especially in LATAM, they are building the super app from the, so to say, delivery, right? If you look at Rappi again in Colombia, then again they built something around delivery. And I personally was privileged to be invested in Rapid, who effectively helped to a bunch of companies to integrate payment and fintech services and card issuing and a lot of like tools like wallets, leveraging the example of companies in China or companies in Asia like Grab. And this is just a new reality. And kind of as investors, I think that we just see the whole cohort of companies which want to enable like this infrastructure layer, which want to enable other companies with a lot of customers, a lot of data, and a lot of, let's say, customer love to become these, so to say, super apps. It's happening, and I personally feel it's a super exciting time to see who will become the one there.
But at the end of the day, you believe that Europe or maybe America will have this super app similar or the same size of the let's say Tencent's WeChat? Is it possible?
No, I mean, time will show. The same size is not really possible just because of demographics of the countries, right? And the relative size.
Not meaning same size from the demographic point of view, but I would say from the perspective of the ecosystem around this.
I wouldn't kind of. I would still think that I wouldn't suggest that it will be exactly the same situation because just the market is different, right? So it's not the case of like monopoly or oligopoly. It's much more, so to say, kind of competitive and fragmented in Europe and in the US. And but at the same time, I do believe that there will be the bunch of services which will find their audience and will become one-stop shop for these customer groups.
Okay.
Peter, you said something at the beginning. You asked, shouldn't Europeans do that? They are trying, but it's the hardest market to achieve that.
Yeah.
In China, everything is much more centralized. In Europe, everybody thinks because of the EU, it's everything synchronized. When you enter a market as a fintech, as a financial company, you enter 20 different markets. You don't enter Europe. This is why big American financial companies have such a hard time, retail companies have such a hard time to go into the European market because they are not entering Europe. They are entering Germany, then maybe Spain.
Exactly.
Completely different culture, completely different language, completely different infrastructure, completely different needs. Has nothing to do with each other. This is just like there's some synergies, also regulatory wise and so on. Yes, but you're entering different markets. And to build a super app for Europe, it's so hard. And my guess is, so I think Revolut is doing a good job there, going into that direction. I think Tinkoff is even, further ahead. I think they're doing a great job in Russia. But again, Russia, one country.
Yeah, I agree. I agree.
And my guess is to have a Western super app is Facebook, not a fintech originally.
Okay. Which is moving with all the strategy towards the fintech services too.
Yeah.
And at the same time, by the way, kind of on top of what Eric said, like apart from it, again, we don't forget about regulations, right? So kind of overall, it seems like in the EU it's sort of similar, but at the same time, if you move money, kind of transfer money from France to Germany within SEPA, it's still international transfer from compliance perspective, and that's a disaster.
Yeah. You don't have a financially synchronized market in Europe. That's an illusion.
We should have this. This should be this one market, one common market is a fundamental of a European Union. But I completely agree. At the end of the day, you're entering too many markets, and the obstacles are too great. But do you believe what I have mentioned at the beginning. So all European Union policies about the common approach to regulating artificial intelligence, to establishing these data trusts that will enable or establish a platform for collecting all this big data, which will then be offered to different tech companies and so on. Can we put a lot of, let's say, optimism in these approaches done by European Union institutions? Can this help at the end of the day the industry? So maybe can this be a first step into having this maybe super app in Europe?
It could, but it won't happen. We're going the opposite direction in Europe, of not sharing any data with anybody anyhow. I mean, everybody in the world being in Europe, going onto any website, it's just like, why do you have these random banners you always click away? This is, this is completely idiotic, but that shows a little bit the direction we're going with data in Europe. So, and this is the other problem, data sharing in Europe, you would need for such a thing. This is like an illusion. We're going into the opposite direction. I mean, yeah.
But look, at the same time, apart from it, there is a sort of like kind of realistic reality, right? So if you look at the providers, kind of infrastructure providers, which were, let's say, leveraging the all Europe regulation of open banking, right? They were all leveraging same regulation, but still they were just really local little winners in the end. And in reality, kind of, first of all, it's culture of sharing. Second is approach how to kind of implement the regulation on data sharing. And 3 is just like reality that there are still local champions and kind of local winners.
Okay.
At the same time, I don't want to kind of contradict my first statement on kind of that there will be sort of winners, but this just won't be the winner takes it all. That's the story.
Like in China, we know that in China, practically all the fintech business, all the digital payments are held by 2 companies, Alibaba and Tencent. Okay.
But look, if you look at Europe, if you look at US, it's just not possible there, right? It's so many payment companies and payment processors, so many payment methods, kind of. In not exactly methods, but just providers. And to be honest, like I mean, from my conversations with many companies, none of them is interested in one. And basically that's why it's sort of fragmented and complicated. But at the same time, kind of, I'm looking always towards the opportunities, and this complication and fragmented part just gives birth to the certain layer of providers who can integrate it and make it plug and play, right? And yeah, I always feel like there is the way to kind of go about it and create opportunities, but yeah, it's just different.
Okay, thank you. Shil, we are now witnessing this clash of titans between big techs in United States, Apple and Facebook, Apple and Microsoft in the past, and so on. Will there also be a huge clash? Who will be this winner at the end of the day with this super app? Do you see this super app as possible in the United States?
I think it's a lot tougher in the United States. I think part of what makes it really doable in other parts of the world there are a large amount of people that were underbanked or unbanked. And so that is where the opportunity is the best. And so we saw that in China, we saw it in India, Southeast Asia. We're starting to see it in Africa with Chipper, and some evidence in LATAM. In the United States, the companies, or I'd say like the closest thing we have to a super app is Square. They have a product called Cash App, and they realized that the underbank is the place to go after, and so they went after that segment aggressively and have done really well. And in the app, you can buy crypto, you can buy stocks, and it starts out with a peer-to-peer. There's now a card product. I don't think we will see a true super app which has a bunch of other things within it. I think it, like, from a design perspective, it's not something Americans are used to. Even if you look at like websites of tech companies here versus other countries, they're quite a bit more simplistic. It's like we do one thing. It's hard for me to imagine it happening, but I think Square Cash is the closest thing. Uber has sort of gone through fits and starts here with like how they display what's going on. Similarly, actually, even Airbnb, they tried adding multiple different things and then they sort of went back to their original design. So it'll be interesting to see what happens. I'm not extremely bullish on super apps in the United States. I am very bullish on super apps in other parts of the country, other parts of the world.
Okay. If we stay for a little bit more in China, Ant Financial, which is a fintech arm of Alibaba, it's practically now conquering the whole market. It became the biggest provider of retail loans. So it's taking a lot of business from the banks. Is this a picture that we'll be also witnessing here in Europe or in United States, so that the future financial sector will be without the banks? I also mentioned these central bank digital currencies, which means that now people and also companies will have their wallets directly opened with the central bank. So no need for personal bank accounts at the banks. So the role of the banks will completely change, or maybe we will not need them. So what's your perspective about this future landscape of the financial sector, with banks or without banks? So is the China, let's say, becoming a benchmark for the future landscape of financial world, or not? What's your opinion? Olga, let's start with you.
Yeah, I feel like I'm just really starting with bold opinions, and that's it. But I have to continue. I don't believe in it. I don't believe that banks will be gone. I mean, first of all, I think that all of us are pretty, I mean, let's be honest with ourselves. It's just a huge system thing which cannot be just gone, right? And there is a lot of, and in the end, banks will always be the holders of liquidity. And if you just consider, so just this cash which they have in the deposits and everywhere, it's just like really, it's such a huge part of the system that I just don't believe it will be gone in any kind of nearest future. But at the same time, they just have to innovate, and this is something what will be happening and what is happening.
Okay, Eric, your opinion.
I mean, many banks will vanish. I'm not talking about these big banks that will that have a lot, like, for example, we work with BNP Paribas. It's one of the biggest custody provider. It's the biggest bank, I think, or second biggest bank in France, but it's like the biggest bank in Europe, I think, for custody. Like they store for other big banks the stocks and so on, like the equity. You have a lot of banks, you will have a lot of banks that will be great when it comes to financing, mortgages. But the small universal bank that tries to do everything for your customer in a digital age, they will be gone. The small, how you say, sorry, but like Olga knows, like Sparkasse, like I don't know what, there's something.
Sparkasse. It's
everyone knows this.
The regional aspect. So if you don't, for example, so what do you do? What are you good at? Do you have a great app where you can do everything? Probably not. Probably it's pretty clunky. So that's not the reason. Mortgages, yes, maybe. When you have the, like from your branch regionally and you want to have your house and so on. But with the younger generation coming into the sector that they are building their house and so on, they want to finance right now, but they are the digital natives now. They will start, not go from branch 1 in their smaller town to branch 2 and that's it. They will look online. What are my options? What is the benchmark here? They are used to Googling everything. So that will be a hard time. And when you don't have something you're really good at, you won't be there in 10 years anymore.
But that's business as usual. It's not only for, I would say, true for banking sector.
Absolutely, but now the
Adapt or die.
digitalization hits the banking sector.
Yeah, I agree. Shil, your perspective?
Yeah, I think yes, if there's something you're not really good at, you die, unless you have a regulatory advantage, right? And I think many of the fintech companies started out saying we're going to replace the banks, and ultimately they have to work with the banks in the United States. In the lending space, all of the startups end up there's a separate license for lending, which they can get, but to get a lower cost of capital, you have to work with the bank, typically speaking. And I think that's probably going to continue here. The regulatory framework is such that that's the only way to do business. But over time, the importance of that bank partner goes away because there are third parties that abstract, a technology company that abstracts away that bank. So you don't have to think about who the actual bank partner is, but there still is a bank partner there.
Mm-hmm.
They will aggregate your volume. It doesn't matter what it is. There will be aggregators, for the mortgages, for any kind of finance stuff, for custody solutions, and so on. And that's the thing. You have other people serving the front end and other in the back serving the back end, like the infrastructure. If you don't have the infrastructure and you have a shitty front end, where's your place?
But with these aggregators, you mean that more or less banks will also become some kind of marketplaces for different services or products?
Yes.
Yeah. Okay. Interesting perspective.
And also kind of on top of what was said before, right? So I'm not kind of US is a bit different in that sense, but if we look at Europe, there are kind of what I see right now. There are quite a few, so to say, banks just on sale, because historically they were kind of just high net worth individuals and families holding the banks because it was just part of their, so to say, wealth and business and whatsoever. But now it's becoming just a rather compliance burden and not an asset anymore, which just brings it's a cost center. Mm-hmm. And this is partially the fact which kind of already kicked off the kind of the wave of licenses which kind of just get cancelled, and also the wave of consolidation. So again, it's kind of, you are not good at it. It's not an asset anymore, and there are others who do better job.
I agree. Good, thank you, everybody. Let's move back to West. I was moderating a panel 2 years ago in London, and also a representative from Revolut was present there as a panelist. And I was very surprised when he mentioned that practically in every business department they're having within every organizational unit, there is at least one data scientist. So does that mean that today a successful fintech also needs to be a data company?
Yes. This was always the case.
Yeah.
Not only fintech, yes, of course. Okay. You know what? I give you a great example. When you talk here, for example, in Austria, to some banks, they don't know, they don't know what to do with the marketing money, and they are very creative. And there's what's always working? Sports sponsoring.
Okay.
That idea is 20 years over. If the data is showing you that, all right, great. But the thing is, they don't take this data. You should only put the money in where your data shows you it makes sense for your product and for your customer group. And if you don't have this, you see sports sponsoring.
Okay.
And if you don't have this, someone will be just better than you in this, in everything, because someone will find better channels to reach the customers. Someone will find better products just from, again, data points and customers' needs analysis. And it's not nice to have anymore. It's just you either do it or you're dead, I would say.
I'm not saying sports sponsoring is bad. I'm just saying if the data is showing you it's good, but in most cases it's not. And then you're competing against the other uncreative bank who thinks sports sponsoring is good, and then you have a good market for it, you know?
Eric, do you have a business intelligence unit in your company? You do?
Of course. Yes, okay. Of course.
Huh?
Show me a bigger fintech that doesn't have it.
Oh, okay. So that's then the something that every successful fintech needs to have. It's not an option.
No, this is yeah.
Okay. No, because at least I can tell you for Slovenian banks, they don't have these business intelligence units. And when I was also discussing with senior level bankers here in Slovenia, they told me that it's impossible to find good data scientists here. That the environment is too small. How is in Austria?
For them, it's also impossible. For interesting company, it's very easy to find.
Okay.
Yeah.
Shil, your perspective.
Yeah, I mean, my perspective is like data science has been hugely important in financial services for the past 30 years. It used to be that you banked with the bank in your area because the way they attracted you was they had, a fancy building that gave you a sense of security. And then, when it became less of a localized product, you started seeing 30 years ago advent of direct mail. And people started being able to target you based on the zip code you live in. And then actually there became like books of like, hey, here's a home value. We can target this customer with this sort of thing. And so that was sort of data science 1.0 in financial services. And then all of that came online 20 years ago. And there are companies like LendingTree, Bankrate, where consumers give some information and the banks basically bid on their leads. Then 10 years ago, it became more like there's mint.com where you have more details on the consumer. And then now we have a lot more data on the consumer. And so you can do really effective forms of targeting. And for any of our consumer fintech businesses, like, a lot of what they're selling is actually like somewhat a commodity, and that there are other people with similar products out there. So a lot of it is how can you target your customer base better, and a lot of that is data science.
Okay, thank you. So we mentioned today already the NFTs. Eric mentioned these fractional shares. We have this yield farming, staking in crypto. I would like to ask you your perspective about into which directions are now going these new financial products. What can we expect in the future? Because 10, 15 years ago, we had these banking loans, we have banking deposits, cash checks, and that was practically it. Now we have much more fintechs have much more to offer, and I guess much more will be offered in the future. Eric, will you go? Because
are we still talking about personal finance?
Okay.
I mean, so for personal finance, you will have access to everything. You will get access. What I said at what we're doing now, as the first company in Europe, I think in a few years will be as the absolute standard, 24/7 trading for any asset you want. And a fraction, because that is the most important thing. No fixed fees, because the whole financial system is designed for people that already have money. So if I want to buy, I always take the Amazon example, because most of us use Amazon on a regular basis. Everybody thinks it's great. I wouldn't even consider stop using it. But then I cannot even afford to buy a stock. And I mean, only people that already have money. And that means the how do you say, the unequivalent, like the difference between rich and people that start building their fortune or that are just simply like not so privileged. It's getting bigger, the inequality, and that is so unfair. And people are getting rid of it. And the younger generation, what I said before, the digital generation, they have a different approach to, for example, selling, paying taxes. I think in my generation and even younger, they are much more comfortable on percentage paying taxes. The whole green, like the climate change, is much more relevant. We have a completely different shift in so many different topics. And for finance, it means, why should someone else be treated differently just because they are not so wealthy? And the internet is actually there, so everybody gets the same access to education, to information, to whatever it is. So this will completely change. And with that, you will see a lot of middlemen falling out of the system. You don't need the classic bank salesman, where you pay commission here and there and so on. What you see is that a lot of younger people will start with, getting their information from YouTube about how money works, how the financial system works, what is an ETF, how does stock work, and so on and so on. And then, of course, you will see some kind of hype stuff, and then they will put money here and there and so on. They will make the first experience. But the idea must always be, develop a long-term strategy, put most of your money into the long-term strategy over many years, and with the rest you can experiment and educate yourself, learning by doing. And I think this is what you see with personal finance. And as I said at the beginning, we have the philosophy that everything that has value will be treated in a digital world in the same way. It also means the spending. So the Visa card we have brought out this year, it's the first card where you can literally connect any wallet at any time. You can switch it at any time with any asset. I can now pay at the supermarket or at the bar with physical gold, with Tesla stock, with Bitcoin, with Euro. It doesn't matter. It has a value in that second, so I can spend it. And I think that is our idea, and I think this will be something the younger generation especially likes a lot on the daily business.
It's very interesting perspective. So that means that now some assets that are not so liquid, with new approaches, with new technology, and with new products and services, will become much more liquid.
Absolutely.
Okay, very interesting. Shil, your perspective.
Yeah, sorry, tell me, rewind for a second. I got a message.
What are the new financial products, financial products of the future? We are now talking about NFTs, tokenized shares, fractional shares, yield farming, so on.
So I think a lot of this stuff is really interesting. I think you have to look at sort of, I guess, like the new financial products I'm excited about are actually less about those, although I think there's a lot of potential there. I think I'm more excited about seamless finance, where you don't have to think about your finances anymore. And so in some of our portfolio companies, your paycheck comes in, they automatically set aside money for investing. They automatically set aside money to put towards your home. And I think that future vision where finance is completely autonomous is a very exciting one. Another sort of aspect of autonomous finance that I'm excited about is when you buy a product, you then have to think about sometimes financing, have to think about insurance. I think having those inbuilt into the product complete sense. And when you buy a Tesla, it's automatically insured. And I think we'll see a lot of that in the years to come.
Mm-hmm. Okay, so we mentioned on several occasions today these big tech companies. Eric really loves Amazon. All these tech companies have one thing in common. So they started with one core product, and now they're building an ecosystem around it. So do you also believe that this is a future for fintechs? Or, for example, Shil and Olga, from the perspective of investors, are you searching for the fintechs that have this potential to build this kind of ecosystem, or are you searching for more niche products within the fintech? Olga.
Look, it's it's a tricky question, right? So I'm a big believer in, first of all, kind of infrastructure, right? And this kind of, you cannot imagine how many companies like really inspired by Amazon, and this is like all we will have the like or Apple, an example, Apple Care, but for every product you buy, or Amazon like checkout experience, but for any e-commerce website. And there is a lot of things which were kind of, so to say, inspired by these giants. And this is great. I mean, we all love Amazon, and this is great user experience. We all use it, right? And why not kind of really expanding it further away? I personally kind of, I can only relate to what Eric and Chill told, right? So I do think that there will be a lot of things embedded, and that's why I'm kind of very much a fan of infrastructure for that. I do believe that there is still a lot to be done in the kind of maybe next step to what Eric said in the wealth management space, right? It's still super broken and fragmented. And an example, just today we announced the deal in the company called Finari, which basically allows you to integrate all your wealth across different classes. Because an example, I'm as an investor myself, a private investor, I just aggregate. I used to aggregate everything just in Google Doc, right? And basically, if you just think about it, there are a lot of these opportunities for kind of really global platforms, which will allow you to do everything at one place, plus like new ones, newcomers. And at the same time, there are a lot of other companies which will become the fintech companies in the end. Mm-hmm. So it's kind of, but it's all about like really platform approach. And those who can make it, they will be the winners, and kind of obviously in their certain verticals, right?
Mm-hmm. Shil, your perspective?
Yeah, so very similar to Olga. I think we're really excited about this infrastructure, and a lot of our investments, we are trying to invest more in that infrastructure layer that allows third parties to build on top of them. It's just there are only so many companies in that space that you can build, and there will be a lot more companies built on top of the infrastructure companies than there will be infrastructure companies. So we're investing in both, and I think a lot of these infrastructure companies are more of a network effects sort of business where there are advantages to because once you build the product, like let's use Stripe, there are other companies building on top of you. So the infrastructure players, I think there's more of a winner take most dynamic than some of the consumer ones. Mm-hmm. Okay. So we just want to be in the best ones.
Good. Eric, are you building an ecosystem with Bitpanda?
Yes.
Okay.
We actually have our own token that is literally called Bitpanda Ecosystem Token. So,
okay.
Yes.
Is it out already?
Yes, for now, 1.5 years, I think.
Okay, and what's the tokenomics?
What is it doing?
Yeah.
It's supporting the ecosystem. So first of all, you have a lot of utilities, but the main utility that it's used for is when you hold it, you can use it for your fees and so on. Like it has a collecting mechanism, it has a burning mechanism. You can get rewards. So it's pretty much incentivizing you using the platform. But coming back to your ecosystem question, what we will also do is providing building, because every product we have built ourselves. So we want to own the infrastructure, because then you can have a long-term success. You cannot say, I want to be, like the super app or something, or like the ecosystem when you don't own the infrastructure. You have to own the infrastructure yourself to adapt constantly, to find synergies, to be cost efficient. If you don't do that, you will need VC money forever. So yeah, that's our philosophy.
Okay. Good. Thank you, everybody. So we have 15 minutes left, and I have the last let's say topic to discuss with you. It's about investments in fintech. And Eric, I would start with you, because you mentioned now that you could be reliant to VCs forever. How did you start your business? With bootstrapping? Because
yes,
we know that fintech business, it's cash demanding. So
yes,
please tell us about your beginnings.
We were 3 founders. We are still three founders. We're all still in the company. We put all of our savings into the company. We literally went all in. That might have looked stupid at the beginning, but now it pays off. I don't think there are many fintech unicorns in Europe, first of all, and then where the founders still hold over 50%, that pretty much doesn't exist. So that was that paid off quite well. But then we are profitable now for over 4.5 years. So constantly. And just because we had the philosophy that we tried to build a revenue stream very early on. Of course, with crypto, it's easier than building a free banking solution to everybody. But every other thing we built, also infrastructure-wise, we said, if it doesn't have its own revenue stream, it needs to support something. It makes a product better that already has an infrastructure, has a revenue stream. So that was the philosophy constantly. And I think now we're benefiting quite a lot from this. That means also we have all the core competency when it comes to regulation and so on in-house. We grew slower probably than other companies, but there's either now it pays off completely because we can at a certain point now do other things other people cannot do, or we are still there, you know, like, and this is not only with regulations, this is also with other infrastructure and licenses and so on. So yeah, I think that was in very, very short our strategy.
Olga, you mentioned that Speed Invest is also in Bitpanda. Can you remember your first date between Speed Invest and Bitpanda?
I can tell you my first date with Bitpanda when I passed, and it's a miss. At that time, I was a Target Global. But
I can tell you a different story. One sec. Well, just one thing.
Yeah.
So Speed Invest, except we did our first like real bigger series. Was a Series A was last year, and then shortly before that, Speed Invest helped us to do this. So they came in early last year, but. And hopefully Stefan is watching. Stefan passed on us 6 years ago. No, 5 years ago. So hi, Stefan. And but now we you know, like found each other again, and we're in Vienna. We stayed in contact over all these years. So yeah, in the end, there's a happy end. It was an expensive happy end for Speed Invest, but it wasn't happy end.
Okay, Olga,
yeah,
back to you
that
now.
happens.
Yeah.
Huh?
Yeah. So okay.
Yeah, my date I passed as well. So now kind of I'm with Speed Invest, which is part of this great story. But for me, it was also an expensive piece.
Okay. One question for Olga and Shil. You probably know for the expression "startup kill zone." This is an expression that means that usually investors are avoiding startups which are developing, let's say, products or solution that might directly challenge big tech companies that would probably be able to develop similar or same solution much faster, because of course they have limitless funding and limitless human resources. One good example was a fight between Snapchat and Facebook a few years ago. Does this really happen in fintech business, or how do you see this? So is this startup kill zone a real threat, or it's only a myth?
Well, I mean, I would say that kind of yes, there is a very common question of many investors, like, but what if Amazon will do it, or what if Google will do it, right? But I think that in that sense, kind of fintechs are relatively privileged in that sense, because let's be honest, like now all fintechs provide the rails for all these big companies, and fintech is just a very complicated animal which requires just very different expertise. And if we kind of go to the other level of like big fintech companies already, right, then it's just the matter of the priorities and the matter of the kind of platform building, because some of them still were built pretty long time ago, and it's not an easy take for them to build something new, right? And yes, an example like Stripe was around for ages, right? But at the same time, like Rapid emerged 3 years ago, and huge company right now, and Stripe invested at some point in it, right? So I wouldn't say that it's a specific zone which kills the startups, but at the same time, like what I personally always try to find as investors, like really category creator, right? So it's yes, the market is unknown, but we just have to find the category creators which are not yet there, which is also sort of like, let's say, killing zone, because it's just nothing there yet, right? But yeah. So that's my take.
If a founder from a startup would approach you with an elevator pitch that he's building a new Facebook, you wouldn't run away.
No, I mean everything has kind of, it should be reasonable, right? So another Facebook, or if you tell me that you kind of, or let's say Visa competitor, it's also kind of like it's pretty bold, right? So it should be all reasonable in a way, right? But at the same time, within the fintech, we all just should understand that there is so many opportunities right now which provide the rails to all these big companies, that it's just, you just need to take these opportunities and to build something big.
Okay, thank you.
I would actually be scared off if someone says, I'm building a Visa competitor.
I heard some of them, I passed.
Yeah, because I think the only approach here is to do it step by step. So first of all, we had very clear goals what we want to achieve, and then a year later we came up with new stuff, and then it got bigger and bigger and bigger and so on. You know, like it was when we started this. First of all, we couldn't really anticipate the industry, but to go there and say like we want to be like we want to have 2.5 million customers and so on in Europe, and sort of like and own the own infrastructure, have all the licenses and so on, like this is not realistic. Realistic is we have this problem right now, we're good at solving this problem, and when you have done this, automatically the next step will follow. And when you have the entrepreneurial spirit and you're, you know, like deeply into that industry, you will find the next step. You can actually use your current market position and your infrastructure and develop to something bigger. But from the saying like we will build a Visa competitor, like okay, you know, you know,
whatever.
Yeah.
I agree.
Yeah, sure. I think, I mean, like, look, it's not incumbents per se that we're worried about. It's this other new incumbent, which is there's companies like Stripe, there's sort of like Square, existing fintech companies that have been around for a decade now that are at tremendous scale but still executing really well. And that is a concern. But if you told me we couldn't invest in anything because Stripe was a competitor, as a fintech company, there isn't much we can invest in, particularly on the infrastructure side. So what's interesting is we've actually had, I'll give you one example. We have a company in our portfolio called Ramp. It's a corporate card for startups. And Stripe launched a competitor. Stripe launched a corporate card. And so people said, you know,
afterwards,
you're
they
fucked,
launched it afterwards. Okay.
Afterwards, similar time. And people said, okay, well, everybody's going to choose Stripe. Well, actually, like nobody uses Stripe. I've never seen a single company using the Stripe corporate card. And then what just happened last month, Stripe said, you know what, we're not succeeding at this. And they ended up investing in Ramp. And I think you'll see that in a few other categories as well. Stripe in particular, like they are executing really well, but actually there have been a bunch of products that they have not executed well on. And I think what makes sense for them is to add on products to their existing suite for their existing customers. So if you're already integrated with Stripe, they should add on other products that are sort of similar to that. But many companies are actually competing with Stripe in another part of their business, so they don't choose to partner with Stripe. And you know, we have companies that are doing phenomenally well competing directly with Stripe in one area of their business.
Okay, so what you have described was a kill zone in practice, but it didn't materialize. Very interesting. We have few more minutes. My last question would be: we tackled some issues between the banks and fintechs. We all know that banks are also entering this, let's say, fintech business in a way of establishing their own VC funds, in establishing their own startup accelerators. What are your experiences with this kind of banking efforts from the banking sector? Are they helpful? Are they accelerating fintech business in general, or are they just competing with it?
So either
90%. Oh, good.
Please.
Yeah,
90% of them are absolute trash, and and you'd be an idiot to take their money, because like, what's in it for the bank? Like, they don't give a shit about you. They're not trying to build your business. They're trying to build their business. So they want to take, some partnership, some ideas from you. It's mostly garbage. Now, a reason to do it, to work with them, is if you're guaranteed some sort of distribution deal. Those rarely, if ever, pan out, but occasionally it's worth it.
Or a pilot project, for example.
Yeah, the pilots never convert though.
Okay.
So if
Eric, please.
If you ever worked with them, they are the slowest possible people to talk to. Like, this is insane. If you want to get, as a fintech, something done, you will probably have pivoted 3 times until the term sheet was signed or something, like approved from the board. Either they leave it completely alone, or they don't do it at all. And mostly what they're doing is they give money to real VCs in the end. This is how they do it. And this is the best they can do.
So it's more or less a PR from the banks, all this.
No, but it's maybe not what people think it is. In most cases. Yeah.
Okay.
Olga, what is your take? What do you think?
I mean, it's so well said that nothing to add here. I mean, in my experience, something happens with banks either late or never, like too late or never, which is pretty much same thing in the startups world and kind of just in the world we live in. And sometimes it's ridiculous. Like, really, I was in the situations once, like many years ago, when the whole year passed since the board I was kind of visiting in person, not on Zoom, but like after 1 year, it's still the same status, right? So it's ridiculous, but that's the reality. And I agree with everything was said.
Shil, do you have LPs from banks?
Yeah, we do.
All right.
And some of them invest directly, some of them don't. Now, we have the ones we have are actually just minor, but we have 2 international banks. In the United States, banks are not allowed to invest in funds. Because basically in the 2008 financial crisis, they were investing in risky assets. Mm-hmm. And so they, as part of the settlement, they had to stop doing that, and venture capital is considered a risky asset. So they had to stop proprietary trading, and along with that, they had to stop investing in venture capital.
So how do they circumvent it now?
So they can invest directly in companies, but they have to. It's complicated. Like, they can only own a certain amount of the company.
Okay.
And then in the United States, they can invest in venture funds, but the venture funds have to go through all these crazy hoops to accept the money. That, like, either you'd be a bad fund if you wanted to go through those hoops, or there are a couple of funds that are very good that are set up just for this thing of taking bank money and partnering with banks. For us, we could raise the money from financial investors. It didn't really make sense.
But retirement funds and so on, they are allowed to, right?
Yeah, that's different. That's different than banks. So banks aren't allowed to invest their own assets, but they can invest third-party assets.
And that is a funny thing in Europe. Then, like, as an employer, you get once every quarter or every year, you get like a performance from the mandatory retirement fund and so on. And then you see the absolute top performance. There's like, I don't even know in a bull market, how to achieve that. That is actually a skill, like to be close to zero.
You invest only in German Bund, so with a yield of 0.5%.
I mean, there's probably like strict rules why they can't do it, but it would be very, very good if European retirement funds could do the same thing as in Northern America, or I think also in Norway they are very active. Everybody would benefit from it, out of it, if they can really participate in the financial market or in the stock market.
Otherwise, the regulation for these pension funds is that they are allowed only to invest in AAA assets, but there is a small portion of funds, usually up to 5% of the portfolio, that can be invested in other assets. Yeah. And I guess here is an opportunity for this kind of thing.
The problem is that the whole financial market and the interest rate landscape changed a lot, and these funds, with the regulation, cannot adapt to it or haven't adapted, I don't know. So what happens then is they are literally burning the money automatically, passively, and that's a pity. So the problem there is it's a very complicated topic, and most people are not aware of this, but that needs a lot of attention actually, where you see it's not about they should be gambling with your money, but they should participate in long-term investments like everybody else is allowed to do it,
Good. Okay, thank you everybody. You were all amazing. We successfully came to the end of our panel. I hope that it was very interesting for the audience, and please, let's go back to studio. Thank you once again.
Thank you so much. Listen, guys, before you go, I just want to say something. This was not a panel discussion. This wasn't a panel discussion. This was four people together, friends that kind of knew each other, some better than others, sharing your thoughts, your insights, really showing your passion, and you could see the vibe between you. It was really good. I'm not joking at all. Really, really good.
For the next time, we only need mojitos in front of ourselves, and it will be even better.
So whoever watches this again, if you're watching this back as a recording online somewhere, I'm sure you'll use this as a resource. It's informative, and lots of great ideas and advice from experts like you four, who know exactly what they're talking about. So once again, thank you so much, and hopefully we'll see you again sometime, perhaps in person.
Thank you. Yeah, would love to.
Don't use it against us, please. Thanks. All right. Bye-bye.
Bye-bye.
Thanks. Bye-bye.
Okay, right. So we are coming to the end of this block right now, but remember, stay tuned, because at 6 o'clock is when we delve into our next block, which is very simply all about corporate innovation. So join us back at 6 for corporate innovation.